Hi everyone, welcome to FOREX Trading Empire YouTube channel. In this video, I'll be doing a trade review on the last live top-down analysis. Before I start, make sure to like and subscribe to the YouTube channel. So on the last live top-down analysis, I talked about price we're expecting the daily fair value gap. And the last week was the FOMC week. I talked about waiting for FOMC to give me the right direction on where I'm anticipating price to trade to. So the overall idea of last week was price we're expecting the idea of going for the buy side liquidity, running out both buy side liquidity. So the week before this week, we anticipated price to trade through the daily fair value gap. This week, we're looking for price to use it as an inversion fair value gap. But if there's any point of interest below the price range, which is this daily fair value gap and the new week opening gap, is to see price respect those point of interest to go for the buy side liquidity. Because there was FOMC, so there were more higher chances of price going for the buy side liquidity this week. So looking at this price on Monday, price not much of a move, I can say you can call it an accumulation. Price accumulated on Monday. On Tuesday, price took out Monday's low, took out Friday's low, came down to the new week opening gap. Price traded down into the new week opening gap, respected the new week opening gap, did the shift of structure needed for price to run the buy side liquidity on Tuesday, which you can clearly see a CRT reversal, price trading back to the daily to Monday's range. Clearly, this is a CRT reversal for price to go for the buy side liquidity. On Wednesday, price traded higher, took out this high, took out last week high, which was Thursday's high and Wednesday high, which I pointed out as equal high as the first drawn liquidity for price to run. Wednesday price took out the high, Thursday price took out the buy side liquidity. And on Friday, price did the continuation higher, going for this buy side liquidity. So looking at this price action, understanding how I use this idea, which was well explained from the last live section, which you can check it out. You just need to use the dates which will be tagged on this video and look at the video that was posted on Tuesday. I did the live top-down analysis on Tuesday. You can check it out on the YouTube channel. So which on Tuesday was on the 28th of October. So you look at 28th of October 2025 live top-down analysis and you find where I explain on price we're expecting, where I talked about the dollar index, talking on how I'm anticipating price to run the buy side liquidity and trade higher. On the 1 hour time frame of the dollar index, on Monday, opening price traded lower to the daily fair value gap. Tuesday, price open, new week opening gap, did the first shift in structure. Now, the video was recorded when price did this shift in structure, and I talked about price not going lower, going below this 1 hour fair value gap. The idea was to see price stay above this 1 hour fair value gap before FOMC. If you were to go aggressive, is to take a trade before FOMC, putting your stop at this swing low. That was the idea I explained. But if you were to wait for more confirmation, is to trade after the FOMC, which on Tuesday, price did another shift in structure, running out this high, leaving this order block. This should be another entry. Stop should be below the 1 hour fair value gap. For price to stay above the 1 hour fair value gap is a safe space before the FOMC news. If I were to be wrong about this idea, then price would have already taken out all this low before FOMC. That was my idea going in on Wednesday. So on Wednesday, price retraced to the other block. We expected the other block, and FOMC did the big push in running out this equal high, which is the buy side liquidity. Now, this is a time where I told you guys to pay more attention to price going for the buy side liquidity because this is the more safe space if the FOMC were to expand higher, which was explained in the live section. On the live section, I talked about if the FOMC expanded higher, look for a retracement down to a point of interest. It can either be a 1 hour fair value gap, new week opening gap, daily inversion fair value gap. In this example on Thursday, price retraced to the 1 hour fair value gap, the new week opening gap. As soon as price traded to the new week opening gap, you can see how price failed to even close with a candle inside the new week opening gap. As it tell you, there's a high probability of price running the high and going for overall targets. Intraday sets up 5 minute entry, 15-minute entry, and this was quite around the clock of the New York of the London section, sorry. Right around London Q zone, price was already expecting the new week opening gap, which your next drawn liquidity on intraday setup is to see price go for the high. So on your day trading setup is to see price run the high from a new swing high, growing the overall buy side liquidity. The setup was pretty clear, which there was a comment on my last live section review. Someone told me to put more attention in showing you guys the actual setup. I don't see anything difficult in what I've already pointed out from those live sections. I think I've already gave you guys the right idea on where I'm seeing price trading to based off my own idea, giving you guys my own perspective on what I see price should do, what I think price should do. For me to point out the individual trades is something that I'm already doing it in the video because giving you guys the idea of you anticipating price to go for the buy side liquidity, telling you guys the right time that I feel that is going to be more safer for you to take those buy trades going for the buy side liquidity, which I told you guys it was after FOMC. If the FOMC were to expand, it's a clear confirmation for you to look for a retracement to a point of interest for your continuation to the buy side liquidity. Any trade you be taking before FOMC is a high risk trade. All was explained, so I don't think there's any more details on me going into more details on those specific trades because those specific trade is already been pointed out. My own personal actual entries is being given out on the Signal group. If you want advantage, if you want to take advantage of those signal of those trades idea, then you should be a member on the Signal group. Or if you want to take advantage of my free trades idea, then you go through the video, apply your own trading idea to it and look for a way for it to fit into your own bias. But first, you need to apply your own trade plan. If your trade plan doesn't meet with what I'm anticipating price to do, then you can say that you're trading against my own personal trade plan. The point is that having your own trade plan as a baseline to whatever trade idea you're using on any social media or on any YouTube channel. Mine is still the same. I use my own personal trade plan based off where I feel price is trading to, using those points of interest which I do pay attention to. Applying them on the chart, waiting for price to respect them, then I look for my continuation. So expecting me to give you a pinpoint or tell you guys to buy now or sell now in the community is something that I wouldn't be doing outside the Signal group. The Signal group is where you have full advantage of those trades. If you want to take advantage of those trades, you need to be a member. But I'm already giving you a broad perspective on where I'm looking for price to trade to every week. And I might be wrong, I might be right going further, but the clear idea is that if I'm on the right side of the chart, I'm taking full advantage of it. On the 5 minutes of the dollar index, now I'm trying to answer as much questions as I can using this trade review, this live top-down analysis trade review. Now there was a question about how do I trade the 3 a.m. to the 4 a.m. setup? How I trade the 3 a.m. to the 4 a.m. setup is very simple. Now this is on Thursday after FOMC. I have a clear bias price respected a higher time frame point of interest, which is the 1 hour fair value gap and the new week opening gap. Price respected it did a 5 minute shift in structure, and we're currently approaching 3 a.m. Now, 3 a.m., you'll use the fair value gap aligning with that bias. Is a clear is a very, very clear perspective on where price should trade to. When you have a clear perspective, price is going for the buy side liquidity. You're just using the 3 a.m. to the 4 a.m. to look for an entry. There is no big secret to it saying that there is a specific strategy that I use during that time to look for an entry. No, I don't use it for buyers. I only use it for entry. There's a specific time that you look for a 3 a.m. to a 4 a.m. fair value gap, and you look for price to respect that fair value gap to trade to the next draw on liquidity. But first, you need to understand the draw on liquidity. Here's the London section because the 3 a.m. to the 4 a.m. setup fall into the London section because we're using the Eastern Standard Time. 3 a.m. Before 3 a.m., price did respect the 5 minute fair value gap during the 2 a.m. to 3 a.m. Price respected the first fair value gap, respected this second fair value gap. This was 250. Then price formed another fair value gap at 340. Price from the fair value gap. This should be your entry using the 3 a.m. to the 4 a.m. setup. And the entry should be like this. Your stop should be at the next draw on liquidity. There should be your setup using the 3 a.m. to the 4 a.m. setup. Now, where did I talk about the 3 a.m. to the 4 a.m. setup? Is in the 2025 free mentorship program, which is in the YouTube channel. If you have been following up, keeping updates on the YouTube channel, you know that I've been posting a free 2025 mentorship program. Try to get through the mentorship program before the 2026 mentorship program. I talked about the 3 a.m. to the 4 a.m. setup, which there was a comment on a specific video where I talked about this specific setup. This specific setup applies to the Euro USD, the dollar index, because they are well correlating pairs around a 50-50 chances of whatever happens at in Euro USD will still occur on the dollar index. So the same setup will still be in Euro USD, which if I get to that part of the video, I'll go to the 5 minutes and point out the same setup for those that do trade with the CFT, the CFD broker. But if you trade futures, you know you can take advantage of this dollar index trade directly. Daily time frame of Euro USD. On the daily time frame of Euro USD, the same buyers looking for price to trade lower to run sell liquidity and equal low. I talked about this equal low. Now on Tuesday, when I talked about looking at price, we're expecting this new week opening gap. I was at that point where when I talked about it, it was after the shift in structure. I told you guys that I'm still not going to be entering on that area. I need to wait for FOMC data. I need to wait for the federal funds interest rates before taking a trade. I think I put more emphasis on trying to explain it on the Hero USD chart because Hero USD is one of the currency that do react to the FOMC data more. The same thing to the dollar index. So taking any trade before FOMC is not advisable, mostly if you're trying to catch a whole daily range or you're trying to target a daily draw on liquidity. So on Tuesday, I didn't take the trade. I waited till on Wednesday after the FOMC. That was when I took the setup. And the setup was posted in the YouTube community and it was still posted in the Signal group. But it was, I posted the before and after in the YouTube, but the actual trade before I even took my own personal entry was posted in the Signal group, which you had to expect it because that Signal group is where I post my own personal trades. Now, with the same idea on Monday, price traded to the new week opening gap. Price was already above the inversion fair value gap. Now, that made it more hard for me to stick to the bias in some idea because due to experience, there are some times when the Hero USD is violating an inversion fair value gap, using it as a support. You might see a little push higher before the actual drop, where prices might go for this week to use it as a resistance area before dropping. So there was a chances of price trading higher. That was why I did emphasize for you to wait till after the FOMC. On Tuesday, price respected the new week opening gap, gave me the right confirmation because there was a CRT inside the new week opening gap. After I identified the CRT, where Tuesday traded to Monday's range, closed inside Monday's range, took out Monday's high. Wednesday, after FOMC, price traded lower. Now that gave me the confirmation of anticipating lower prices on Thursday and on Friday for price to run the sell side liquidity. On the 1 hour time frame, on Monday, you can see how Monday traded to the new week opening gap. Tuesday did the shift in structure, traded higher, took out the highs. Wednesday, lower retracement. FOMC did the full shift in structure. Now here's the breakers block, retracement to the breakers block. This was my actual entry. Now this is the entry I did take, looking for lower prices for price to run the sell side liquidity. Now this is a trade you will be holding for more than a day because price might use the whole week, which was on Thursday and on Friday, to run the liquidity. But intraday setups, you can identify lots of intraday setups from this order block trading lower. As long as prices were expecting a higher time frame point of interest, which was fully aligned with the inversion daily fair value gap. You can see how perfectly aligned they were aligned with the breakers block. The same goes to the new week opening gap. I told you guys, whenever I'm using a new week opening gap, if I'm anticipating lower prices and price trades below a new week opening gap, I will look for price to retrace to that new week opening gap as a support area. Sorry, as a support or a resistance area, depending on the bias. So I'm looking for lower prices. I'll look for it as a support, as a resistance area for price to drop down. And you can see how 3 points of interest was fully aligned with the breakers block. Retracement to the breakers block were expected it traded lower. On Friday, you just need to see the 1 hour run a liquidity. Now, when you're applying a daily power of three, you need to know that in a daily power of three, when you turn on the daily breakers, you have a bias already, an overall bias on the daily time frame. Whenever you are in that mode where you are ready to look for that expansion trading lower and you want to use a daily power of three for your entry, which I talked about the daily power of three, and it was a question that was asked in that same video I talked about daily power of three. I have a bias of anticipated price to run sell side liquidity. I want to see price open points of interest trade to a daily or a 1 hour point of interest, which in this example, it was both an inversion fair value gap, a new week opening gap, and a daily breakers. And this was around New York section. So this is around London section. It was still the same trade with the dollar index. So price respected it. You can see opening price, manipulation, and the distribution lower. Same thing goes on Friday. Price was accumulating. During the New York section, price traded higher, took at this high. You just need to see a draw on liquidity. You need to see price run that liquidity for a manipulation. Then you look for an expansion lower. And your draw on liquidity should be the sell side liquidity. So I'm putting on this main point on those specific topic I talked about and how to apply it with my idea of whatever bias I'm anticipating that week. I'm anticipating lower prices. You just look for a power of three, align with that idea, and you look for your trades lower. Euro USD. This was on Thursday. You can see the daily fair value gap, inversion fair value gap, new week opening gap, and the 1 hour order block, which is a breakers block. You can see the fair value gap entry for your entry. Stop at this high. Target should be the sell side liquidity or the 1 hour swing low. Retracement back to the fair value gap, respected it during the New York section, 7 a.m. to the 8:30 a.m. setup. Retraced to it, respected it, traded lower, took out the sell side liquidity. So using lower time frame, which I've talked about, I've posted shots about it in the YouTube channel. You need to have a higher time frame alignment. It's very easy for you to take trades on lower time frame, to scalp on the lower time frame, or take a daily trades on the lower time frame, trying to catch the daily trend when you have a higher time frame bias. It's very important to have a higher time frame bias. Looking for a short term trend, Just looking for that next draw on liquidity on the daily and on the 1 hour. Aligning those with the lower time frame is very, very important when you're trying to trade daily setups. Same goes to on Friday. You can see run on equal highs, buy side liquidity, shift in structure, entry on the fair value gap. Your target should be the sell side liquidity. So it's still very easy to take intraday setups to take those daily trades when you have a higher time frame bias. And you can see how price traded lower to run out the sell side liquidity. Those entry times, which was used for the lectures, are those specific times when, if the higher time frame is fully ready to expand either higher or lower, you use those times to look for your entry, like the 3 a.m. to the 4 a.m. setup, the 7 a.m. to the 8:30 setup, and the 8:30 to the 10 a.m. setup, which you can see the 10 a.m. setup still the same. 8:30 to the 10 a.m. setup, price trade to this fair value gap, which price we use it as an inversion fair value gap. You can see retrace back to the fair value gap, use it as an inversion fair value gap. This should be your entry. Traded lower, retracement, order block, respected the other block, traded lower, retracement again to this other block, respected the other block, and took out the sell side liquidity. This is the 8:30 to the 10 a.m. setup. On a daily time frame of GBP USD, now on GBP USD on Tuesday, price already traded to the sell side liquidity, and I pointed out that if price was to keep on trading lower, that if the dollar index kept trading higher, there's a high chances of price trading through this week and taking out the sell side liquidity. I told you guys to pay attention on how price will be trading through this week, which I pointed out using the Fib level. So I used the Fibonacci to indicate it, indicated it in the last live video. So on Wednesday, price traded lower, almost traded to the low. I think on Wednesday, that was when price took out the sell side liquidity. Price used the FOMC to trade it through the week, took out the sell side liquidity. On Thursday, continuation, price took out Wednesday low, and on Friday, price took out Thursday's low. On the 1 hour time frame, you can see how price traded through with the FOMC retracement. The same breakers block we identify on Euro USD, the same idea. Price respected it. Look for your intraday setup for price to run out Wednesday's low. Price traded lower, took out the low, and on Friday, still the same idea. Just apply power of 3 for price to run out Thursday's low. On the daily time frame of USD JPY. Now, USD JPY correlation, we know that if the dollar index is trading higher, then USD JPY will be trading higher. So on Tuesday, price already retraced to this fair value gap, which on Monday, price retraced to the fair value gap. On Tuesday, price traded lower to the new week opening gap, respected the new week opening gap, did a 1 hour shift in structure. I posted the setup on the signal service talking about price going for the buy side liquidity. So price respected it, used the fair value gap as an inversion fair value gap, traded back to the fair value gap on Thursday, respected it, traded higher, took out the buy side liquidity. On Friday, price did a consolidation and closed in the range, which mostly I wouldn't be trading on Friday because this expansion running out the buy side liquidity is well enough in price. Now you might see a little continuation going for Thursday's high. You just need to be more experienced enough to look for that intraday quick setup to be in and out of the market. But you can see how price respected the daily fair value gap, respected the daily fair value gap, respected the new week opening gap. How price respected it, took at the equal high on Thursday and closed above highs. On Tuesday, new week opening gap, shift in structure, retracement, inversion fair value gap. We expected it FOMC, traded higher to this new week opening gap. Now, this new week opening gap, you can see how price used it as an inversion entry. I talked about the new week opening gap on the 2035 FOREX Trading Empire mentorship program, how I used it, and I've talked about it a few times on how I used it. If I'm looking for higher prices, I want to see price use it for support. If I'm looking for lower prices, I want to see price use it as a resistance area. After FOMC traded higher, did a retracement back, daily fair value gap, respected the daily fair value gap one more time, traded higher, took at this high, retracement, new week opening gap, respected the new week opening gap, took at the buy side, liquidity. So you can see there are many areas for you to take advantage. You can take advantage from this inversion fair value gap, or you wait for after FOMC to take advantage from this fair value gap or the other block. You can see there's another block here. Here's the other block. Price retrace to the other block, and the other block was fully aligned with the daily fair value gap. So you can see lots of confluence for you to place a stop. Either you put your stop below the daily fair value gap, or you just put your stop below the other block. Price respected it, traded higher, and this was the setup. This was the setup that was posted in the signal service, and this setup targets high. So both setup, here's the first setup, and the other setup was the second setup. So that is it for this video. Make sure to like and subscribe. See you guys in the next video.